Hello, Stephen. Hello, Robert. How are you guys?
Good, Tony. How are you?
Hi, Tony. Thanks for having me on.
Well, thanks for joining us. I have a lot to talk about, but time is of the essence, so let's just get rolling. ZyVersa is a clinical stage biopharmaceutical company. It's got a long list of things that it has accomplished over the years. Why don't we talk a little bit about the latest goings on, Stephen?
Sure, I appreciate it. And Robert, nice to meet you on the panel too. So we've been very focused over the last almost 6 to 7 years on two disease areas. One is in the area of renal diseases, which has a huge inflammation problem in many of the treatment patterns that the patients are going through. Most of them are on steroids or calcineurin inhibitors. And then in the other area that we're in is in the inflammasome area, which is a really new area in biotech, targeting the innate immune system around a whole host of diseases, everything from Parkinson's, Alzheimer's to atherosclerosis. So really broad-based approach to treating inflammation.
And Robert, I want to talk a little bit about you and the progress you guys have made at Sparrow. Sparrow is currently conducting not one, two, but 3 phase 2 clinical trials with this lead drug. And that's certainly something that ZyVersa can identify with and the challenges that come with that. Why don't you talk to us a little bit about that?
Sure, Tony, thanks. Yeah, we have 3 ongoing phase 2 trials, which are all being conducted in multiple countries, and we have 8 employees. So we certainly have our hands full, but we make heavy use of consultants and vendors and partners. And I think that more and more, that's the way a lot of this work is done in this industry by small companies, to be able to leverage our people and get a lot done.
And for ZyVersa, Stephen, talk to us a little bit about the scientific breakthroughs you've seen that are driving drug development in inflammatory diseases.
Sure. There's a lot of new information that's been coming out around cellular biology, particularly around this structure called an inflammasome. And this inflammasome is a perfect example. It's kind of your first line of defense in innate immunity when you get a virus or a pathogen or you've got cell-driven diseases where you're getting cellular death and in diseases like Parkinson's and so forth. The ability now to target what we're doing is targeting a monoclonal antibody at these inflammasomes to inhibit them from producing cytokines such as IL-1 beta and IL-18. So those are the cytokines that cause a whole host of problems in multitudes of diseases. And inhibiting these has really been a breakthrough in the last 5 years in the industry. And it's led to a lot of good collaborations, M&A and licensing, a lot of activity in the space as a result of that.
And Robert, just to continue with that, breakthroughs in the space. What kind of breakthroughs have you noticed?
Yeah, thanks, Tony. So, I think the modern field of immunology was born 75 years ago when cortisone was isolated as an agent administered as a therapeutic, and the Nobel Prize was actually awarded for that. It created quite a sensation because people with rheumatoid arthritis literally rose from their wheelchairs and walked around the hospital. But within weeks, a lot of those patients had sworn off the drug and said they'd never take it again due to the side effects. So for the last 75 years, people have been trying to solve that problem, largely unsuccessfully. There have been some topical approaches to steroids, and of course, that problem has birthed our entire biologics industry. And so people continue to try and work on that problem, but we have a completely novel approach that we think we can maintain the efficacy of glucocorticoids, but reduce their side effects and increase the safety. And if we're successful, I think we could step back and revolutionize immunology once again.
And Stephen mentioned before the M&A licensing that will take place in this space, hopefully more than last year. But you guys, ZyVersa, went the M&A route not that long ago, whereas Sparrow went the Series A route. The deal making in this space is so difficult to do, even in a good year. Talk to us about the trends that you guys expect in 2024 between fundraising and M&A. And we'll start with Stephen.
No, great point. And Robert, congratulations on everything that you're doing. I think the area that you're in is very, very important. And, if you look at, I've been doing this for about 40 years, Tony, and you're seeing, I call it nuclear winter now moving away. And you're seeing funding taking place for innovative companies. You're seeing companies go public where, the IPO window was closed pretty much in 2023, late 2022. But what's really important is that the big pharmaceutical companies have a war chest, and they're out looking for the right collaboration partners, whether it be a licensing deal, whether it be an acquisition. And you're seeing a lot of activity. There's some recent reports, the activity is as robust in the first quarter as it's been in the last 3 years. So I think this ability to collaborate with companies, develop your pipeline is there now, and I think it's up to us to take advantage of that.
Robert?
Yeah, I just agree with what Steven said. I'll just add, we got fortunate. We raised our Series A 3 years ago, right before we entered nuclear winter. And people kept asking me how we were going to raise money. I said, well, fortunately, we don't think we have to raise money until we have data, and data talks. And so we're in a position now. We have some phase 2 data coming out of several of our trials. We're very excited about what we're seeing. And I think the markets are starting to open up. I think people are still a little wary, but I think that there's certainly capital available for good innovation and good data, and I think that's the position we hope we're in, and so should be a positive future.
Yeah, like I mentioned before in the previous discussion with Misha, I mentioned Pocket Health raising $33 million in a Series B. That was announced today. Clasp Therapeutics, an immuno-oncology startup, $150 million in a Series A. Care 51, a cancer survival data analytics startup, 15 million euro in seed funding. We have to see a lot of venture capitalists warming up to this space, no? And what does that mean for Sparrow in terms of approaching these investors and ensuring it has the runway to bring these products to people who need it?
Yeah, I think everything flows downhill from the public markets because people need to be getting liquidity, getting exits, and then recycling that capital. And so I think it's really encouraging that the biotech index is rebounded. We're seeing some IPOs get out. I think that's freeing up capital all the way down the line. And so there's definitely money there to be put to work. I think the last couple of years, people were very nervous about deploying that capital. They wanted to make sure they had capital to support their existing portfolio companies, and also valuations, came down again, really filtering down from public markets. But that seems to be opening up now, and I think there's money to be put to work for sure for companies again that have good innovation, good data, in particular with phase 2 data. I think that's people are as they start to go back to risk on from risk off. I think people feel more comfortable with phase 2 clinical data as a first place to go.
And Steven, just looking at the ticker, ZVSA, that's you. It's good. 52-week high of $96.85 today. It's in the green at 82 cents per share. From the position of a CEO, do you worry about the stock ticker at all? And what could we expect from ZyVersa in terms of shares and financial results in the coming quarters?
Yeah, of course, as a public company CEO, you're always worried about shareholder value and how you drive it and how do you optimize the use of capital to do that. I'll tell a little story here. I actually was chairman of Ambrex Corporation. Ambrex was a perfect example of a company that was trading at 41 cents in December of 2022. We drove the data, as Robert talked about, early patient data, and we basically just sold the company at JPM for hours and $28 a share. So I always say to everybody, it takes a little time to drive the data. You've got to be able to get to those inflection points. But once you do, you have the ability then to show great shareholder return. And I was at the Bio CEO conference, and picking winners right now may be the best market for biotech investors in a long time. Valuations are way down, but the science continues to move forward. And if you're smart about it, there's a lot of home runs out there.
It's interesting that some of the feedback I've gotten from investment bankers over the past year, there was this discrepancy between what a company thought it was valued at versus what it could actually get from an M&A deal. So I'm curious to know, and I'll go to Robert with this. Do you think that they're getting more on even keel now, that there's maybe less discrepancy in 2024, or do you still have a sense that valuations are still very much disputed between companies and their advisors?
Oh, I'm shocked that CEOs would think their companies are worth more than the acquirers. Look, I mean, I think that one problem companies got into is during the frothy days, they got into what I call a valuation trap. And so, if you raise money at a very high valuation, then you really can't transact below that because the investors, of course, are underwater. And so that created a disconnect, particularly when public stock prices came down and acquirers said, well, I'll pay you what I think it's worth or what the market says it's worth, and companies weren't able to do that. So I think that was a real problem. I think that's changing, right? Because valuations have been reset over the last year. People have done some painful dilutive rounds, and so I think that is changing. So I think you will see M&A picking up as well.
And Stephen, what about you? I mean, you seem like you're very tuned into current M&A trends. Healthcare, even in a down market in 2023, the healthcare sector, which includes biotech in most tallies, did really well comparative to the other sectors. Are advisors and sellers and buyers starting to get on the same page in terms of valuations?
I think people are looking at this very, very closely. I know when I was at Roche and Amgen years ago in the portfolio groups and in the corporate development, you're always looking ahead at the 5 or 10 or companies that you're following, right? You're trying to understand where their inflection point's on. You're following them to track where their data progress is. And as part of that, if you're a strategic investor, you're not as valuation sensitive as a public company investor, right? So I think, you have different views of value here. I think the public markets right now and investors that are in it are seeing the opportunity to get in where they might have made a 1x or a 2x return, now see a 5 to 10x return because the valuation has been pushed down so much. And I think that really plays out in how you bring capital into your company and what value you do to get to that use of that capital to your next inflection point. And that's the important piece as a CEO, is doing that in a timely fashion so that you hit your windows, right? And I think that's key for any investor on a valuation basis.
And we did see a rash of deal making reverse the declining fortunes of biotech stocks. What are some of the major deals that surprised you guys in the past few months? A lot of people are predicting an uptick in deal making. Sparrow is a privately held company, but was there anything either in the public sphere or privately that surprised you, Robert?
Well, we are both in the rare disease space and in the rheumatology space. We didn't get into kind of the whole applications, but I mean, I've seen some deals in the rare disease space that I think are pretty exciting. I mean, the AstraZeneca deal just I think last week was pretty exciting for the rare endocrine disorder, and that actually happens to be where our other application of our drug is in the rare endocrine space for endogenous Cushing syndrome. So I think that that's exciting. What I heard over the last couple of years was that people were definitely starting to get more into immunology as well, and particularly assets that could have multiple follow-on indications. And so I think both of those areas I hear are I think are picking up, and that bodes well for both ourselves and ZyVersa.
Stephen, any surprises? Any price tags that you were like, that's ridiculous?
Well, I'll say as a CEO, no price tag is ridiculous, but especially one that's in the range that your board likes. But I have been following this area. I sit on the board of a couple of immuno-oncology companies. The ADC space continues to be exceptionally hot, and you're seeing a lot of positioning on kind of on a FOMO basis. They don't want to be left out in the therapeutic area. The inflammation space is very hot right now. If you look at some of the recent acquisitions, you're seeing $11 billion acquisitions in phase 2. You're seeing a whole host of companies declaring to be in the obesity space, which is clearly an inflammation-driven space. In our area where inflammasomes are really hot, We're seeing $5 billion worth of preclinical M&A in the last year or so. So I think you're seeing certain areas are gaining great valuation increases, particularly in the inflammation space, given that it affects 70 different diseases. So I think you're seeing some pretty interesting value propositions out there right now.
And Sparrow can relate to that. It was founded to sort of spare patients the ravages of steroid side effects. Inflammation. Why is it so hot right now, Robert? What do you think?
I think there was for a while, companies were really interested in kind of the small oncology indications, and some of these areas were really hot. And then I think companies started to realize that blockbusters weren't actually dead, that you could still develop blockbuster drugs for big indications. And they started to look for those areas where you can add on. And I think in immunology and rheumatology, that's one of those areas where you can get an agent and then you can continue to add indications. And so, I mean, that's certainly our approach with our drug, where we're doing a combination with prednisolone, the very common steroid medicine. And as I said, we believe we can reduce the side effects of that medicine. Well, then that could be used anywhere that prednisone or prednisolone is currently used. And so that's, I think, a huge potential for a product, and I think people recognize that.
So we're still early on in 2024. We're about to wrap up the first quarter. If you had to make predictions about certain trends that you expect to see unfold in the next 3 quarters, what are they? And will it have wide-ranging effects? And we'll start with Stephen.
Great question. And if I had a crystal ball, I would be a trader rather than a CEO. But I will say that you're seeing 3, I think, major trends here in the biotech sector. One, as the Fed reduces rates, whether it's as quickly as they think they're going to or not, you're going to see that continue, I think. And every half a point change here for the rate change is just a great situation for biotech, as you get a rotation from other sectors back into biotech and pharma. So I think that's one thing you're going to see. I do think that valuations being where they are, continued M&A and collaborations, you're going to see that. I've talked to a whole bunch of companies that are either in discussions or contemplating discussions around collaborations, and I think you're seeing that. And I think the other thing that you'll see, the continuation of good data. So there's a lot of companies that have been kind of working and grinding to get to the data inflection points. And I think you're seeing a lot of that, like ourselves with data late this year, really coming to fruition. And I think that's the 3 things that I keep watching.
Robert, 3 trends?
Yeah, I also have 3 overlap a little bit with Stephen, but slightly different. So, I start with the biotech markets specifically, which clearly we've seen. They're coming back, they're getting better, and I think it's opening up. But I think layered on top of that, the macro environment, I think there's still a lot of uncertainty. Have you ever seen a soft landing? So that appears what we're headed through. But I think there's a little bit of skepticism as whether or not that can really come to pass, or if there are going to be some headwinds. And then the third thing I think is the political environment, and that it's an election year. And so a favorite punching bag is the pharmaceutical industry, and we've seen some legislation that I think. In that regard, that finally got passed, and that I think could have some impacts. So I think that's going to be layered on top of those. And I mean, I'm bullish. I think when you're coming out of a tough couple of years, then I think it's likely to be in a better position. But those are things I think we'll have to continue to monitor.
Well, before we wrap up, I want to get your thoughts on AI. It was a topic that kept coming up throughout the event today. Does it affect your space? The CEOs we spoke with seem to think that it'll have an effect on every corner of healthcare. What are your thoughts, Stephen?
I do think AI is an evolving technology in healthcare, particularly in biopharma. Targeting early stage drug targeting and validation is really an optimal way to use AI. And the industry's been toying around with it now for actually almost a decade in different forms. And I think the continuation and the learning of that is important. The issue for big pharma with AI is, what are you going against in your databases, right? I mean, how are you determining these trends and trying to understand the patterns? And some of the database structures are not large enough yet to yield a lot of targets. You know, there really hasn't been a drug proved yet generated from out of an AI program. So I think it's early. I think we're going to learn a lot, but I think it's got to be a huge toolkit that we're all going to use.
Is it a toolkit you're going to use, Robert?
So, I mean, I do not make a lot of use of AI yet, but I think it's going to have an enormous impact on our industry. And I agree with Stephen that, you know, some of the early applications certainly is on the research side, which we're not currently doing a lot of. But, you know, high throughput screening and rational drug design are things we've been talking about a long time. But just imagine with the huge machine learning models, how much more efficient those could be and effective. So I think we're at day one of decades and decades of the use of AI, and we can't really see where it's going to be used. But I do think it's an incredibly powerful tool that's going to increase productivity across the board.
So between both of you, I think there's up north of 50 plus years of expertise in the biotech space. Stephen, we'll start with you. Tell us some of the major lessons you've learned over the course of your 3-decade career in biotech. What were some of the lessons you took with you?
Well, I think, you know, biotech is a long play. You have to be able to be thoughtful about how you're spending your capital. Don't get too big too quick. You want to be focused on generating the value in what you're doing. I think that's a key message that we already learned in the last couple of years. I think the other thing is to understand where the science is headed. If you are looking at a program that might take 10 years to develop, you've really got to be thoughtful about how you project 10 years down the road, right? You have to be thinking, is the target that you're going after appropriate? Like an inflammation, hot area, a lot of these products that are coming out won't be here for 5 to 7 years. So you got to be thoughtful about how you're designing your clinical trials, your programs, so that the payers in the United States will be able to reimburse you for those programs. So those are two major lessons that are there. And the last one is keep your network of investors very close to you. Make sure they're updated. Make sure they understand what you're doing.
But you have to sell those investors time and time again, though, on what you're doing, too.
You do. And I think it's important. I say communicate, communicate, and communicate. Let them be informed and let them understand what you're doing at any given time.
Robert, do you keep your investors informed all the time? Do you ever wonder or worry about being annoying and contact?
No, I don't worry about being annoying. I think, yeah, you can't over communicate to your investors. The one thing you can't do is surprise people. And so, you know, as Stephen said, this is a relationship business. I think if you get a bad reputation, then you're dead. And if you have a good reputation, people want to work with you. And so I think if you're straight with people, communicate people, and they know what's going on, then you know, they can take good news and they can take bad news. They just can't be surprised.
And what about the lessons you learned over the years? I mean, you have a solid 20 plus years of expertise in biotech. I know
the number keeps getting larger every time I introduce myself, but I'll wax a little more philosophical. I mean, I think our industry, you know, I'm very proud. I think our industry is one of the great engines of innovation on the planet, and we do a tremendous amount of good for a lot of people, and we'll continue to. The amount of innovation coming out is mind-boggling, and yet, you know, I think our industry is generally perceived very poorly, and I think, you know, we have to. Why
do you think that is?
Yeah, so I believe that we as an industry have a social compact with society in that. We're granted patents, which means we can get monopoly profits, and that those profits are intended to drive innovation. And that innovation needs to deliver, and then after a certain period of time, those patents are over, and those innovations are then free to society. And I think that's the kind of cycle that we've agreed to. And I think as an industry, we haven't been very good at policing ourselves at times to abide by that compact, either by are we driving true innovation, or are we abiding by the end of it and letting things go generic. And then I don't think we've done a good job of, you know, communicating that, certainly either. So, you know, I think we have to look in the mirror and say we're responsible for both delivering on that promise and on communicating to people what we're doing. And so hopefully we'll do a better job of that.
You know, I had an editor who liked to ask this question, and I love it. I love to sort of close out with this, and it could apply to your field, but it could also apply to just in life in general. What keeps you up at night? What do you worry about, either inside the boardroom or outside the boardroom, or the C-suite, I should say? Stephen, what stresses you out?
You know, it's a funny question. To me, I'm pretty good over the years at managing what I can anticipate and wild cards that worry me. It's the political environment, right? It's things that you watch, and you watch similar to what Robert talked about. You know, some of the perceptions of the industry that you really can't control at times, and you see some of the wild predictions in an election year where, you know, people are saying some stuff that you know is not going to come to fruition, yet you've got to be able to react and deal with that. So it's really the unknown that I sit and worry about, given my experience and background. Everything else is pretty predictable in some ways. You kind of know what to do, or you got peers you can talk to. It's that unpredictable nature of the political environment that can be real problematic.
Well, does that inform you in an election year at all? Like is it stability? We've talked to financial professionals who value that stability, and they even if they might lean a certain way, they're concerned about that. So is that what you mean? Like going into November and wanting stability after the results of election day?
Well, I think that's one thing that you've got to be cognizant of, right? Because again, you're developing programs that might take 2 to 3 years to get through a phase 2, for example, and you design a program a certain way. And then if you have a change in political leadership that is not consistent with where you're at, you have a lot of damage control to do. So I think those are things that you have to be cognizant of as a CEO. You try to prepare as much as you can to manage it. And you want to make sure that you've got industry support, like from bio or PHMRA, supporting you in what you're trying to do.
Robert, they're probably going to come on now and tell me and boot me like they did before. But I just want to get 30 seconds. What keeps you up at night?
You know, people think this industry is risky because, you know, the science, unpredictable, and products fail. That doesn't bother me. You know, we design the best trials we can, and some work and some don't work, and it's okay. I think what keeps my anxiety up is just on a private company, you work on a funding cycle. So every day we're a step closer to being out of cash, and we have to deliver before we get there. So that's the life of a private biotech company. But they told me this is the job I wanted. They keep reminding me of that, but
you want it, you're stuck there.
It's a lot of fun when you start to see good data coming out and you know you're helping patients.
Well, I had fun talking to you both. Stephen Glover, Robert Jacks, thank you so much for joining us for the Benzinga Virtual Healthcare Summit.